taxes is your number one expense. And the other thing that happens, the other reason people buy real estate is they want the depreciation. So there's a thing called recapture of the depreciation when you sell an asset, and that can get pretty costly.
From cornfields to high-rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate, right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
I've got Jeff Niemeier here on the show. Jeff, welcome.
Hi, Neil. Thanks.
I'm excited you're here. Say, for the audience to say, who are you? Where are you from? What do you do?
Yeah, my name's Jeff Niemeier from Cedar Rapids, Iowa. I am the founder and I'm the managing principal of JB Capital. JB Capital is a private equity real estate firm. Our current fund is called the Iowa Legacy Fund. It's for build-to-rent townhouses in the Cedar Rapids, Iowa City corridor. And I'm also the host of the Student of Money podcast, where we talk about entrepreneurship, investing, real estate, and personal development.
Another podcast host. I absolutely love it. Say, you've certainly had a long career, very successful career, doing a lot of things in real estate to get you to this current fund. Take me back to some of the beginnings. How'd you get into real estate industry?
So I'm going to take you back to the entrepreneurial bug that hit me about turn 2000. Somebody actually introduced me to the Robert Kiyosaki books and started reading Rich Dad, Poor Dad, Robert Kiyosaki, seen him at a couple events and said, I really want to be an entrepreneur. I really want to start my own business. So in 2002, I left the company I was working for, started a technology business because I'm an IT guy, engineering background, and ran that for a few years and was doing cable television, high-speed internet to apartment complexes and commercial head ends and hotels, things of that sort. And one of the owners said to me, who actually lived here in Des Moines, hey, we can sign this contract for this bulk cable television, but if we sell, you have to renegotiate with the new owner. And I said, oh, you're interested in selling. Would it be okay if I gave you an offer? And he said, yes. So we ended up doing that deal. He actually did seller financing for me. So I went out to my friends and family network. I raised $65,000 of friends and family money, and I bought about $880,000. I bought an apartment complex and 2 single-family houses with that.
What year was that?
That was 2006 and 2007.
Okay. How'd you manage it?
I managed the properties myself, and it was a learning curve, just like everything else. It's the same thing with my business too. When I went out and started my business, I used QuickBooks accounting, and I tell this story that for 4 years, I never filed my income taxes because I didn't know what I was doing. I didn't know accounting. I didn't know books. Yeah. And finally, I came to a point in time where my CPA told me that no bank's going to give you a loan for anything, or nobody's going to do anything because you haven't filed any taxes. And my wife's freaking out, and she says, they're going to come after us. And I says, they actually owe us money, so they don't really care that we haven't paid. And what really got me off the seat was my CPA says after 3 years, they're not required to pay you any money that they owed you.
Okay.
So I says, okay. So I sit down with my CPA, and we finally got together my books, filed my taxes, and I got like a $20,000 refund check for all 4 years. And just for me, and now today I'm like an accounting guru because I've been doing it for 20 plus years. And it's the same thing with property management. I was fumbling along. I joined Landlords of Linn County. I did join Landlords of Iowa. I went to all their networking events. I went to all their monthly meetups. I asked a lot of questions, and you just dive straight into it. And just from bumps and bruises, I cut my teeth on student housing, and which is a very intensive, because it's a constant turnover.
It's a heavy lift.
Mm-hmm. And I was also doing RAGBRAI. I've done 25 years of RAGBRAI in a row. And RAGBRAI hits at the worst possible time because it's right at turn for all the students.
Correct.
Yeah. It's right in the middle of turn. So basically I would come back from RAGBRAI and I would work nonstop through the middle of September. and trying to getting students in and then coming back and doing repairs and doing all of that. I finally moved away from student housing, but really to answer your question, it's just trial by fire, sink or swim. I call it the burn the boats.
Yeah.
Just burn the boats.
Absolutely. So you move out of this or advance on, if you will, from your first acquisition. How did you eventually stumble into student housing?
Student housing actually was the very first deal.
Oh,
so the apartment complex and the two houses I bought were all student housing. Okay. So the 16-plex was all student housing. It was actually called Kirkwood Dorms. It was dorms. And then, so this is at Kirkwood Community College in Cedar Rapids. Yeah. Kirkwood owns none of their own housing. So they pretty much rely on all private housing institutions. So I was going to Friday, what they call TGIF, where they bring the students on campus, doing open houses, doing all of that stuff. And then the very first house I bought was an empty lot. It was a developer that had a cul-de-sac, and I bought the lot from the guy building it. And I took the plans and I locked up 4 tenants. This is a great story. I locked up 4 tenants, took their deposits, took their first month's rent, promised them that the thing would be built and done August 1st so they can move in. And then I told the developer, we got to close like July 30th to the 1st because I've already rented it. Went to the bank with the purchase agreement and the signed leases and their security deposits and first month's rent as down payment. And at that time in 2007, I was able to get a 80% first position loan, a 10% second position loan. I had a couple $1,000s of one of the moms says, can I pay for the entire year all up front? That's what it was. So I had their security deposits. I had an entire year's rent all up front. So I think I put $2,000 on a credit card, and that is how I bought that first property. And then the second one and the third one was friends and family money. So and I still own that house today, and it cash flows great. And I think I own 6 houses on that little cul-de-sac now. So that's how I got started, because the number one question I always get is, I don't have any money. Yeah. I want to do real estate, but I don't have any money.
Got to get creative.
Creative financing.
Yeah. So you continue to acquire more student housing, right? How would you end up with at your peak?
So student housing is by beds.
By beds, yep.
By beds. Mm-hmm. So we had about 1,000 beds, and I was providing cable television and internet to about 2,000 students in the Kirkwood area. Okay. Because once I put in my cable TV and head-end and internet, I just started going down the street and just hooking everybody up.
Yep.
And I finally sold that business to venture capital in 2005. I saw high definition streaming services coming on board. People were switching over from standard definition to high definition television. So I either had to upgrade all my equipment or I had to get out of that space. So I sold that company and then dove headfirst into just completely into real estate. And then I figured out that my friends and family money was technically a syndication, a security. And so I'm like, I've got to learn about this. What's a security? How do you raise money? And people always start out with their friends and family network.
Sure. Right.
But eventually in 2011, I did my first official syndication where I raised money to buy a 16-plex and still from my friends and family network, but some of the more wealthier friends, I guess you would call them. Yeah. And I still own that property today, actually, too, because I never sell. I say that, but then I sold a bunch of properties in 2020 and then had to redeploy that money to avoid taxes.
All right. So let's talk about that. Why the properties that you never sell, why do you never sell them? And the properties that you did sell, why did you sell them?
Because I hate giving the government taxes is your number one expense, right? And the other
Absolutely.
And the other thing that happens, the other reason people buy real estate is they want the depreciation. So there's a thing called recapture of the depreciation when you sell an asset, and that can get pretty costly. So by the time you pay capital gains tax, long-term capital gains, and then you recapture the depreciation, there's a big chunk of that profit that's gone. So you have to redeploy that money. As an active investor, I can redeploy that and then start the depreciation cycle over again. And so I do it to avoid taxes. And by doing that, you're able to, that money you would normally pay in starts to compound. and you start to be able to buy more and more. So what I talk about in my podcast is getting to that financial freedom where you have more money coming in than you have going out every month. And then you can really start to now invest even more and more. So it starts to get into that snowball effect where it really starts to snowball.
You sold some of the portfolio in 2020, but not largely for financial reasons, right? Largely for...
I did that to get out of the student housing to focus on what I'm currently doing today.
Yeah. What's next?
So what's next is going from a syndication to a fund model, and then going from buying pre-existing, maybe distressed properties to building Class A properties. Specifically, right now, our Iowa Legacy Fund, we're building townhouses.
Yeah, it's a build-to-rent model.
Build-to-rent model.
Where are they being built? Where are you targeting?
So Fund 1 is Cedar Rapids, Iowa City corridor. So we're looking at North Liberty, Tiffin, the south side of Cedar Rapids. We've got already have some acres locked up. It's not one big, it's actually 4 different parcels for a total combination of about 226 units.
I'd imagine there's some unique and challenging circumstances that go into construction, but at the same time, tremendous benefits by constructing versus going and buying an existing thing and then rehabbing it.
Yeah. One, you get to pick the location.
Yeah.
Which a lot of times, if I'm looking at the MLS or I'm looking at what's for sale out there, I don't necessarily like their locations. People aren't selling because they're great cash flowing properties. Typically, there's a problem. So when I was looking for properties, I was always looking for train wrecks that I knew I could fix. Yeah. And then you got to take a look at what part of town are they in? And is that something that, because you can fix the property, but you can't fix the neighborhood.
Yep.
So you've got to be able to know that, one, I want to look for that. Let's Aladdin say, do you want to look for that gem? Yeah. And so you can't fix the neighborhoods, but I can fix the property. But you're typically buying Class B minus C properties, and you really don't know what you're getting into until you have managed it for 6 months to a year. And there's brand new construction when you walk that has headaches and problems. And at least when I build it, I know exactly. And I'm trying to build to a Class A, and everything's brand new. So the maintenance is going to be a lot lower. It just seems like I can build it. The other thing is I'm not building to sell, because when you build to sell and you build a long-term hold, it's completely two different builds.
Correct. Right.
There's some houses that I look at that I would never buy that are built.
Absolutely.
And I don't want to name any builders, but there's different qualities. And there's things that I'm going to put in the plumbing, different cleanouts. And so I can run snake lines and things of that sort. I'm going to do certain things that are going to be a difference in quality, because I know that I'm going to be there long term, and I know that I'm just not going to flip it.
Hey, Iowa investors, this is Ava Baukamp, Chief of Staff at Legacy Impact Investors. Have you thought about adding real estate to your portfolio but don't have the time or desire to play landlord? At Legacy Impact Investors, we do the heavy lifting. Our team finds the deals, manages the properties, and handles all the day-to-day operations. Our select group of qualified investors co-invest with us, gaining ownership equity without opening a tenant email or responding to a maintenance call. They just share in the income, appreciation, and tax benefits. These opportunities aren't for everyone. They are for qualified, accredited investors only. If you want to learn more, please visit legacyimpactinvestors.com to apply.
When I think of some of the unique challenges that go into the new construction side, the very first one comes to mind is ground, the ability to get ground, to get it where you want it, to get it at an appropriate price, or in an economic, situation that gets it to pencil. What are you doing from the ground side standpoint to put deals together?
Yeah. So I split the deal up into two things. I split the deal into what I call the pre-IPO, which is the ground deal, to acquire the ground and then to get it entitled for development. And then once it's shovel ready, then it transfers over to the fund for the long-term construction and development. But one of the things that I think is very little utilized, and a lot of people don't even know about it, everyone is familiar with a 1031 exchange.
Sure.
You buy a property, you sell a property, and then to keep it tax-free, you roll it into the next one. There's also something called a 721 exchange, which is instead of people bringing money into a deal, they can actually bring the deed to the land, and they can exchange the deed for partnership interests. And that also is a non-taxable IRS code 721. Everybody can look it up. You can do a like-kind exchange, or in that instance, you can exchange it into either an LLC or into a limited partnership, which is what I use. So I'm able to, and we could price this property at whatever the seller, as long as you can justify it from a market standpoint. So in the current market that I'm in, farmland is going for development land where they have development actively going on all around. They're listing everything about $95,000 to $100,000 an acre, and a developer isn't going to want to pay that.
Correct.
Because they have to put in all the streets, the water, all of that stuff, all that infrastructure. I'm able to go to that owner, typically before it's even listed with an agent, and say, hey, I'm going to give you a full price offer of $100,000 per acre. But here's the deal. You're going to dictate the price. I'm going to dictate the terms. What I want to do is a 721 exchange. You're going to do a non-taxable event. We're going to put it on the books at $100,000 an acre. We're going to bring that in as your capital account. And then typically I'll give them some money up front, but that's non-taxable too, because that's not a sale. That is a return of capital from what they brought into the deal.
Wow. Okay.
So it's not taxable, right? So they get some money up front, but then the owner is also the perfect partner to bring that land in. Same thing I would say with the vendors and the contractors. They're the perfect partner. Hey, what's your equity on this deal, or what's your profit? You need to bring that profit into the deal too, and be an owner into the property. So I do that with the land, bring them into the deal, get it up and built and stabilized. And then once it's stabilized, we'll refinance, give them back the remainder of their capital. And again, that's all tax-free because that is a return of their initial capital. Right. Plus, they'll carry 5% into the construction. So they'll be a long-term owner of it, when that 5% typically equates to about another $100,000 per acre. So not only am I giving them a full price offer, I'm actually giving them potentially twice what they're asking for on their farmland.
What a unique and creative way to be able to address really a challenge, or what could be a roadblock to get you to over the finish line with the project.
I have to educate them.
Yes. Yeah. I can imagine you have to do a lot of educating there.
Yeah. So the first deal we locked up for this, I sent him a letter of intent. I gave him my pitch deck. He did all my due diligence. He called all my references. He called my commercial banker. He checked on everything on me. And he kept sending the documents over to his attorney, and his attorney kept sending me purchase agreements. And then he would modify the purchase agreement and send it over to me. And I keep sending him LPAs, limited partnership agreements, letter of intents. And then they kept changing all of that and says, no, we just want to. And then finally he comes to me and he says, hey, my attorney just figured out we're not doing a real estate transaction. We're doing a securities transaction. And I says, aha, the light bulb just came on, didn't it? And I says, you're right. This is a securities deal. And then he says, my attorney isn't familiar enough with, we have to find another attorney because he doesn't know securities laws, or maybe a CPA or a tax attorney or something that could actually. So he actually had to go get advice from someone else because his family attorney, it went above his head. Above his pay grade, whatever you want to call it. So the education piece on that and how it worked. But once he got it, it was, like I said, like a light bulb coming on. So we closed. He did get some money up front. And then we've got payments that are scheduled that we're making as we progress to get it entitled. So now we've got the architects working on it. We got the civil engineers. We've already submitted our proposals to the city of Cedar Rapids. They've already done a preliminary report back on it. So everything is getting towards that entitlement. And then the best part about that deal is there's another developer that's building 200 homes around me. And he is bringing me all of the brand new streets, brand new water lines, brand new sewer. So I'm technically doing infill development because I'm not putting in a city street. All the infrastructure is his deal. He's bringing it to me.
Incredible.
And I just got a piece of the land in the middle because the seller was pricing it too high that the developer's like, I'm not going to pay you that.
Right.
So he walked away. I came in and was able to make a private deal with him, picked it up, put it in my pocket, and now I get to take advantage of the 200 units that this developer's putting in around me.
Wow, that's incredible. What a unique way to be able to address that. What are you most excited about next year?
If you're a house flipper, execute the burst strategy or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Building.
Yeah. When's dirt going to turn? When are you going to go vertical?
The general contractor, who's a friend of mine, he's talking March, April. That's pretty aggressive. The architect says he's going to have, the big thing is we're trying to get plans in our hands so that he can take it out to his network to get 2-3 bids on everything so that we can get it done. So you never know with weather, construction, what's construction.
Right.
But we want to go first thing in the spring. And right now we're negotiating all of our asks with the city of Cedar Rapids on what we want. Anyway.
Well, it's going to be interesting to see how it comes together and goes vertical next year.
Yeah. I'm really excited about building. I'm actually shocked that I haven't built before now. And what happened was when I sold one of my student housing complexes in 2020, I actually sold it to a developer from Iowa City. And there was an empty lot on that property that I had sold. And for student housing, I was thinking, I'm going to put an amenity out there. I'm going to put in a half-court basketball court. I'm going to put in a picnic bench, a grill, whatever like that is. Yep. And he built on it. He built a brand new 9 more units, 4 bedrooms, another 9 times 4, 32 units, went 3 floors up instead of 2. And he instantly increased the value of that property by $1 million. Yeah. And so after I sold it to him, and he overpaid me too. He overpaid me and because he had 1031 money that he had to play. Sure. So he bought that property for me, and I thought, and then COVID hit, and I thought, this guy's not going to do very well. Student housing, COVID, overpaid for it, but he had to because of 1031. I go there next spring. He's breaking ground and building more buildings. Because why? Because he's a builder. That's his mindset. I wasn't a builder, so I didn't even think about the possibility of building a building on that site. He saw the value. The fact that he overpaid $100,000 for the property, he's going to get that back on building that building.
It's unique when you bring your perspective, somebody else brings theirs, because we all have a different lens in which we view these deals through.
And they talk about it on the appraisals. The appraiser will usually put in there best purpose for this land.
Highest and best use,
Highest and best use. Mm-hmm. And sometimes it's just changing it from one tenant to another. Yeah. So when I went from students to workforce, rents went lower. It wasn't as profitable because student housing is actually one of the most profitable.
Correct.
So what I ended up doing is I moved towards corporate leasing. So now a lot of my single family houses, I have corporate leases where they put the clients in.
Yep.
And I don't have to worry about the tenants. They take care of the maintenance. And my rents jumped right back up to where they were with student housing, but without the headaches. So it was one of these deals where you have to shift your mindset and think about who's my tenants. Like a lot of people now say, I go by the 1% rule. Rent should be 1% of what the valuations are, but nothing pencils out now. Right. By changing the uses, they do. Which you got to think outside the box in order to make it work.
Especially during times where things are not so easy. Things are challenging. When interest rates were 3%, you could make a lot of things work that you just can't make work today.
Yeah. So you need to be doing things like looking at properties that are off market. Mm-hmm. You need to be out there networking. So I rarely use a realtor. I always typically buy properties that are off market and do private deals. And they're out there. You just have to, you got to work a little harder at it.
Jeff, why Iowa for you? You could do what you do anywhere. You could own anywhere, but you choose to do it here. Why?
Yeah. Obviously, the easiest and obvious answer is when I first started out, I was a do-it-yourselfer. So I was doing everything. So the properties had to be within a drivable region, right? Because I was doing all the maintenance, I was doing all of the property management, I was doing everything. But when I started the fund model, and the very first week, I joined a master class. And the master class, very first week, you got to pitch them your deal. And they'll tell you whether or not your thesis is correct, your investment thesis. Yeah. So I spent, that was kind of like, oh boy, I really need to think about my investment thesis. And immediately it was like, oh, wow, Florida and Texas and down the Sunshine Belt are the hot market, right? Right. So I wrote a thesis saying I'm going to go down and invest in Texas, or maybe I was going to do a fund of funds and raise money to invest in someone else's syndication and doing all of this fancy stuff. And then I thought to myself, the problem with Dallas and Florida, and not only is the property taxes, insurance, hurricanes, all of these other issues. The other fact is I just don't know that market. Yeah. I've been a landlord in Iowa for 15 years or more, and I know the market. And my competitive advantage is right here in Iowa. And Iowa is a business and landlord-friendly state.
It is, for sure.
So when I took a look at why am I looking at taking money and trying to, because then I'd have to partner with somebody else. Right. Because I'm not from those areas.
Yeah, so you need an operator there.
You need an operator. Right. Or if you do the fund of funds, there I just think you're just double gouging your investors because they're having to pay one waterfall at the syndication level, and they have to pay another waterfall at the fund model. And that's just not aligning your values with your partner, with your LPs. Yeah. So I says, what do I know best? I know Iowa. So where can I find value? And then I did an interview with Daryl High from High Properties in Cedar Rapids, and he said the same thing. He said, Cedar Rapids, Iowa City corridor, we're at 500,000 in population. We're right on the threshold. Des Moines is a great market. So I'm just concentrating on two markets. Concentrating on the Iowa City, Cedar Rapids corridor because of the growth and the boom that's going on. And I'm concentrating in the Des Moines area.
There's so much to like here. No, that's fantastic. You ready for the final three questions?
Sure.
If you had one piece of advice for your 20-year-old self, what would it be?
Ooh, work on your business, not in your business.
That's a great piece. Yeah.
Because that was my problem.
Correct. 2 books that changed your life.
Cash Flow Quadrant, Robert Kiyosaki.
Fantastic book.
And Hunter Thompson's Capital Raising for Real Estate.
Yeah. If you were cast away on an island for a year, you could only get 3 pieces of data about your business each and every month. What 3 things must you know?
Oh, that's got to be rent roll, income statement, balance sheet.
Fantastic. Right? Fantastic.
For my accounting, yeah, there you go.
Yeah. This has been a great conversation. I can tell you I've learned some things. The 721 exchange, what a fantastic little nugget you've brought today. That has been great. Jeff, I asked lots of questions. What's one question I did not ask that I should have asked?
Wow. Real estate is a business. So people want to think, oh, real estate's real estate. And the reality is real estate is still a business. So I think on some of those questions there, people need to treat real estate investing as a business. Yeah. And then you got to learn how to scale it and run it as a business. So I think that's, to me, that's key element as opposed to the whole mom and pop. People are like, I don't want to invest in real estate. I don't want to fix toilets. I don't want to do property management. But if you treat it as a business, the things that you're doing today, if you're working as an employer, you have issues, you've got problems, you've got all of those, but you got the exact same thing on real estate. But if you're doing it and treating it as a business, you can overcome them.
Work on it, not in it. Focus on the on.
Right. Real estate's not a hobby. Treat it as the business that will supplant your income and get you to financial freedom.
For people who want to find you, they want to follow you, they want to connect with you, where can they go? What should they do?
You bet. I got 2 main websites. jbcapitalfund.com is for our real estate fund. If you're a potential investor, our portal, pitch decks, all the paperwork, all that fun stuff's there. If you're a budding real estate guy and just want to learn more, then you're going to go to studentofmoney.org, where we've got our podcasts, we've got our YouTube channels, we've got all our information out there.
Fantastic. Links below in the show notes, everybody. Jeff, I appreciate you being here.
All right. Thank you very much.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.